everyone is so short-sighted, and it is really always the people that have a longer time horizon, a lower time preference that win. And this is just repeated in history so much. Like cycles, not so much. Maybe massive cycles of like, decade-long cycles. But the cycle of people with low time preference and long time horizons winning is the cycle you want to look at, right?
Samson Mow just dropped a warning that could completely change how you see Bitcoin current price action, and the implications are massive. Right now, market sentiment is leaning heavily bearish, but Mow believes something deeper may be happening behind the scenes. He's pointing to the possibility of short-term price manipulation shaping the narrative and shaking out weak hands. Here's where it gets controversial. While many investors are expecting a major crash, Samson Mow is telling holders not to panic sell. That sounds counterintuitive, especially when volatility is rising and fear is spreading across the market. But according to him, this phase could be a deliberate setup designed to create maximum uncertainty before the next big move. If the market really is being influenced by large players, then sudden drops may not reflect Bitcoin's true long-term trajectory. Mow argues that once the pressure from these so-called manipulators fades, Bitcoin could enter one of the strongest upside expansions we've ever seen. So the real question becomes, are we witnessing the start of a deeper crash or the final shakeout before a major breakout? Pay close attention to how sentiment, liquidity, and institutional behavior evolve in the coming weeks, because what happens next could define the direction of this entire cycle. Let's get more clips of Samson Mow's insights.
But there are definitely players that are trying to push the price down. Like you can see it. It's very plain, like the 10 a.m. dump. When the market's open, it dumps. And then did a 10 a.m. dump on a Saturday. Like these dumps don't happen organically. Every fiduciary or every investor that is looking out for their best interest should not be market dumping, right? Like you want to maximize your return by selling at a good price without massive slippage. So there's only three groups out there that would want to dump it. Like either you're someone trying to suppress the price for some reason, and you're going to dump with, I would say, I don't even know if it's like traditional paper Bitcoin, like derivatives. I think it might be more malevolent, like FTX style. Some exchange doesn't have the coins and they're selling them, that style, because it's too easy to track normal paper Bitcoin. It's like the fraudulent paper Bitcoin. The second group is like people that want to push the market down because they're hedged. Like they're a trading firm and they hedged already and they want to tank Bitcoin. So they're going to dump it and try to recover. And the third group is just traders that blow themselves up. So these are the only ones that really want Bitcoin to go down. They want to see those big red drops and instill fear in the market. But I think there is a heavy cost to that. Each one of those silos comes with a heavy cost. Obviously, the trader that blew up, that's a heavy cost on them. Yeah. But the firms that the trading firms that are trying to do this, there is a risk that it doesn't work and they're going to be sidelined because the Bitcoin bounces aggressively on the upside. And then the people that are doing it with Bitcoin that doesn't exist, obviously that's going to come to roost when there's a run on that exchange or whoever that they need to produce the coins. And that's going to send Bitcoin going back up too. So it's like not sustainable, this kind of overall suppression of the market. And fear, I don't think, is enough to push us down. Like we've seen selling. There's like, I don't fully believe in on-chain metrics, but there are some on-chain metrics of some people sell. And there's public disclosures of whale selling too. And you have to think adversarially. You cannot take it as face value. So maybe that whale that said I'm selling or sold and he made it very visible was trying to trigger a down run that he can buy back up lower, right? Because a lot of these guys are traders too. Maybe not like the guy that blew himself up on the weekend with Ethereum, but they are types of traders. But still, like that cannot happen forever because there is the buyer of last resort, there's a hodler of last resort, and there are the infinite bid treasury companies. So it has to stop eventually. The ultimate scarcity of Bitcoin, and more importantly, the verifiable scarcity of Bitcoin, is what is going to drive the price up. Silver, you don't know how much there will be, how much there is, how much is real. Silver is also a byproduct of industrial process. So you're just going to have silver popping up. Gold, it can be manufactured in fusion reactors now. They found it accidentally. They made gold by accident. And, and gold will always be produced. There is more gold that will be dug up if the market price warrants more gold being dug up, right? And you have no idea how much gold there is. So they're both defective in terms of Bitcoin. This is why Bitcoin is the apex predator of hard assets. So it's going to react eventually. The question is when. And at times like this, when people are fearful, it's difficult to see the end of the road, but we all know that Bitcoin will go up. It's just a question of when. There is no price model that predicts Bitcoin declining over time. If you look at any of the price models, Bitcoin 24 from Saylor, Plan B, stock to flow, and the power law, blah. Every single model predicts Bitcoin going up because it is a scarce, hard asset. And you have this new cohort of people that will bid forever and pay any price, right? Like Saylor disclosed today that they bought their last chunk at 87K. Now, if you're a disbeliever in Bitcoin, why wouldn't you just wait and set a limit order or tell your broker, I want to sell at 87? Why do you need to dump it and, sell it for cheaper? Like, don't you, if you want the fiat, don't you want more of the fiat, right? Like, and there is a buyer. You don't need to dump it right now on the market and get less fiat if you want more fiat. It's just forced sellers right now pushing the market down. But any rational seller that does not have to sell immediately will get a bigger return in fiat terms if they don't panic sell.
What have we not touched on yet that is you're keeping an eye on or is maybe concerning to you?
Well, I mean, we talked about it earlier, but there is nothing that Bitcoin doesn't solve. Like, if you're worried about geopolitical instability, if you're worried about war, if you're worried about asset seizures, if you're worried about anything, you're worried about inflation, you're worried about monetary policy, you're worried about the bond market, you're worried about the stock market, you want the asset that you can verify and hold for yourself. It's that simple. So there's no real reason to worry. It's just, we're just patiently waiting for the world to figure out what we've figured out. But they will figure that out because it is that simple. And when they figure it out, Bitcoin, there's not going to be a lot of Bitcoin left. Like the last concern people had was there's not enough liquidity. And I saw that headline on some news site. I'm like, what are you talking about? There is no liquidity for sellers. Like, yes, there are sellers now, but a lot of them are forced sellers or possibly people trying to suppress the price. But who are the big sellers? There are a lot of defined buyers out there that exist in the space simply to buy. And it's almost gamified in some way that they're all trying to outdo each other and buy more than each other, or even buy each other and accumulate each other's Bitcoin stash. So where do you see the liquidity coming in the era of the infinite bid? That's what I want to know. Like, you're worried about liquidity, but you're worried about liquidity on the wrong end of it because Bitcoin is finite. Everything is Bitcoin denominated. Like, every asset will be traded against Bitcoin. I think fiat currencies will fizzle out. Eventually we'll end up trading against gold or something like gold. Probably gold because it has the history. But that is the market. We'll be trading Bitcoin against gold and buying stuff with Bitcoin because Bitcoin can be everything. It can be the currency and it can be the asset. Now, there are of course thinkers that only view Bitcoin as an asset. And then there's a lot of Bitcoiners that think it's money. It's supposed to be spent. The answer is it's both because it is information, and information can serve both demands. And Bitcoin has the scaling tech like Liquid, like Lightning, that allow it to do both things very, very well. So what you see is a unification of every single form of money and value store in the world into Bitcoin. And that's just why Bitcoin will go up forever, because that is the use case that it's absorbing. just the real estate market alone is something to the order of $400 trillion, you know, globally. And that will be absorbed into Bitcoin. And there are only 21 million BTC. So, you know, I just don't see us holding these levels very long as soon as this starts to happen. And the frustrating thing, I believe, is we're just not seeing it. Like, we're seeing the instability, we're seeing the uncertainty, we're seeing like the comings of real estate problems through population collapse, just no demand for real estate, right? But we're not seeing the impact on Bitcoin yet. And I think it's just a matter of time. Is it a month later we'll see it move? I don't know. Is it 2? I don't know. But I definitely know it's coming soon. And again, the best indicator is precious metals.
The Clarity Act.
The thing with laws is laws always change, and not always for the better. Laws conflict with other laws, and the conflicts don't get resolved. Maybe AI will fix some of this stuff, but the way it works right now is just volumes and volumes of more complexity and more laws and loopholes and ways around things. And I think Bitcoin is just opting out of that entire system completely. But I don't think it matters so much. What really matters in terms of law is the Bitcoin Act that is passed, where the US can accumulate in a non-budget neutral way. And who knows, maybe some of the run up in metals was a way to revalue the holdings in Fort Knox so that they could be sold to buy Bitcoin. I don't know. But again, like, it comes back down to the core of the thing. Like, none of us know, and none of us will know. We're not insiders. We don't have a channel in to what's happening at very high levels. So all we can do is protect ourselves and protect our families. And the way to do that is Bitcoin.
What is the thing you think that drives the Bitcoin price the most? Like, is it like ISM, the business cycles? Is it just like sentiment, like you said, in a way? Is it M2, you know, global liquidity, like that? Like, what is the thing that, you know, that Samson looks at when he's kind of like looking for, like, okay, where's society kind of moving? Where's the puck going right now?
It's a good question. I don't really think there is any one singular thing. I look at a number of factors, but I think the biggest factor is just people understanding Bitcoin. And that is what's holding them back and holding Bitcoin price here. It's the lack of understanding, but that can change really quickly. It can change on a dime. Again, go back and look at the German mark, the Weimar, the Weimar situation. It's not like slow, gradual thing. Just suddenly one day, you know, someone's going to say, I don't want dollars for the loaf of bread. I want sats. And it's like, people discount the fact that Bitcoin being used as money contributes, but it absolutely does contribute. Like, people spending money in the developing world, in Latin America, in Africa, using Bitcoin as their daily money, that all contributes to this. The awareness, the understanding, and the adoption curve is all driven by every single thing. And that's not something that's trivial.
Bitcoin's latest drop has sparked serious fear across the market. With price falling toward the mid-$60,000 range, more than 50% off its all-time high, many investors are asking the same question. Are whales intentionally pushing prices down to trigger panic? Large on-chain movements and increased exchange inflows suggest major players are active, and historically, periods of extreme fear have often coincided with accumulation phases rather than long-term distribution. Analysts like Willy Woo and institutions tracking ETF flows have pointed out that deep corrections during bull cycles frequently reset sentiment before the next expansion phase. Meanwhile, macro liquidity expectations and continued institutional interest suggest that long-term conviction around Bitcoin hasn't disappeared. It's simply being tested. This is where Samson Mow's perspective stands out. He argues that volatility and sharp pullbacks may be part of a broader market structure designed to shake out weak hands before a potential upside move. While short-term downside, even toward lower price zones, remains possible, history shows that extreme fear has often preceded strong recoveries in previous cycles. The real question is whether this moment represents distribution or strategic accumulation before the next leg higher. If you found value in this video, make sure you like, comment, and subscribe, as we drop daily Bitcoin and crypto updates. Thanks for watching.